Hello, everyone. Welcome back to the Keymaker Podcast. Today is me, Alejino, here. My co host Keith can't show up today, but I have the wonderful guys over at Umami Labs, in this case, CEO Defialpha.
Hey there. Yeah, no, I'm really happy to be on this podcast with you, Alejino. And I know this is our second time doing a Kingmaker podcast, so I'm pleased to be back.
No, yeah, I'm really thankful to have you guys back. I know you guys have had a lot of things developing the background in DeFi and on the legal side with your legal entity, and I would love to speak more about that. I have no particular set of way I'm gonna go about this. I'm gonna assume everyone in the audience know who you guys are, but if not, give them like a short introduction. Not too long as the first one because I'm sure almost everyone know who you guys are by now, but you get what I mean.
Yeah, no, I mean, I hope so, although I still find that, we do definitely spend a good amount of time educating people on our basic strategy, in part because we're pretty new. What we're doing is pretty new and doesn't easily fit into to existing categories. So, in essence, Umami is what some people might be calling sort of CE DeFi, but we're a hybrid project. We're an on-chain DeFi DAO on Arbitrum Network, but we also have off-chain legal entities, Umami Labs and Umami Advisors specifically. And our mission is to bring DeFi to the masses, particularly to the institutional market, to what might be called TradFi, as well as just sort of CFI crypto investors. We think that there's been a gap for too long between the DeFi world and everyone else, and that we need compliant and trustworthy DeFi rails to connect institutional capital to the incredible activity going on in the DeFi space. And so, very more specifically, what we're doing is building a suite of vaults of tokenized, yield generating, risk hedged vaults that generate yield on USDC, BTC, and ETH by providing liquidity to really great protocols in Arbitrum and Ethereum and possibly elsewhere. And then we take those tokenized vaults and through our compliant CFI structures through Umami Advisors and some of our partners off chain, we make those tokenized vault products available to the institutional market.
No, yeah, I'm really excited about that because like a lot of DeFi natives, they really hate institutions or like firms and all that. So if I don't use the right terms, my bad. But I think you know what I'm trying to say. But it is really important to get them on board. Like as you know, there's like a bunch of large players, like companies or whatnot. They're starting to buy and hold crypto in their portfolios, and all they do, they just have it sitting around. So like in a wallet or on like Coinbase or something. So if you can be able to bring them on and have their like ETH or whatever like do something good for like the ecosystem, that's definitely a plus.
Yeah, and I love how you framed that at the end because I think you raised an important point, right? I mean, there might be a variety of reasons why DeFi natives don't like institutional capital or just sort of the centralized corporate world in general. I would say personally, I probably am aligned with them in a lot of those sentiments, and so are many others, in our community. So I think that what I want to convey is that what the space clearly, if it's to reach its potential, if it's actually touch people's lives and have a meaningful impact on the world outside of this small DeFi ecosystem that's emerged, thus far, it obviously needs to branch out. And it needs to meet, the larger marketplace where it's at, right? Which means learning how to work with institutional investors. That being said, I am strongly of the view, and this is something that I think motivates me and others at Umami, that it's really critical that it is DeFi projects, DeFi natives, taking the lead in this drive to build a bridge to the institutional market. There are CFI institutions that are kind of pushing in, trying to do the same thing, but from the other side, right? So that they would thinking about building on-chain products themselves, and delivering that to their institutional users. And of course, the risk with that is that if you have institutions that in their DNA are fundamentally centralized corporate entities, they will they are more likely, let's say, to bring that ethos into what they build on chain, which could have long-term negative effects on the DeFi ecosystem, right? And as DeFi natives, the team at Umami, we want to see Ethereum remain decentralized. We want to see trustlessness, permissionlessness, censorship resistance as the bedrock of the future financial system, and obviously that is a trait of much DeFi currently, and we want to see it stay that way. And we're not idealists. We don't think that there will sort of never be any form of regulation, but we are of the view that having DeFi projects take the lead in building these compliant rails for reaching institutions themselves, and for building the contracts, the products at the smart contract level, for these yield products that we're going to deliver to institutions, that that is likely to produce a much more favorable outcome for the DeFi ecosystem, for Ethereum, sort of just the greater blockchain ecosystem as a whole, than if we just wait on corporate entities to build these things, right? Because it will happen sooner or later. DeFi and smart contracts will become mainstream part of the financial system, but the question is, who is going to be building those? And we would like it to be, members of the DeFi ecosystem doing.
No, yeah, and I like the way you put it, like us ourselves, because we know the ecosystem better than anyone else. We've been a part of this for a long time, and like an outsider just like looking in, like at least that's what I believe. Like they won't get the same Is it? I don't know if ideology is the right word, but they won't see things the way that we do. No, so I really do appreciate that, and since you're building on top of all these other great protocols, well, only GMX right now, but like, and you have these good ideas, if you help kind of make the liquidity sticky, since most companies have like cash on the balance sheet that just sit there.
Yes, that's well put. Yeah, no, your comments are very on point. I mean, just imagine, because here's the thing. So imagine you have a project like Umami that's building for that is doing what I just described, right? That is taking the lead in onboarding institutional capital, and as a result, our smart contracts are at least at the base layer, they're going to be permissionless, trustless, censorship resistant. Built on Arbitrum at first, we might build on mainnet after that. So, imagine a project like us takes the lead in onboarding institutional capital, right? We're doing this in a way that ensures that that capital will only benefit the space, right? It will not be sort of suddenly siloing everyone into, a very limited, constrained, permissioned CeFi sort of model. But instead that, we're just getting the upside of, all of this institutional liquidity. And think about how much damage has been dealt to the DeFi space thus far through these sort of really costly, really high emissions liquidity bootstrapping efforts, that have been necessary to attract any kind of stable liquidity for many tokens on various chains. Imagine replacing that with institutional capital that is stable, at least stable quarter to quarter, if not longer term than that, that is thinking like institutions do about the kind of yield that is required to make something attractive, right? So we're talking, single digit APRs in many cases are still going to be highly attractive to institutions. And, the potential benefits for the space in terms of having that kind of, much deeper, much more stable liquidity, not needing crazy token incentives in order to sustain sticky liquidity, but instead only needing to be able to engineer something that can return sort of what would be considered a quote unquote normal APR in TradFi. That would be a far more mature, far more usable DeFi space, and I think that's the direction that we hope to help things go over the next 12 to 18 months as we execute on our product strategy.
So one thing that I'm curious about before we go to the DeFi aspect, I still want to dig a little bit deeper into the legal aspect, because I don't know how many other podcasts have done that. So if you guys are helping them to onboard, are you guys going to also hold custody of their funds? Because a lot of, like, as I call them, normies,
Mm.
since I'm really deep into the space, get even intimidated with the word seed phrase or having to sign a transaction. Like, are you guys gonna do that as well, or like you guys gonna like teach them from scratch how to do everything, etc.?
Great. No, we won't. I mean, again, very on point. I can speak from experience. Earlier on in our the process of developing our overall strategy, we met with people from sort of all walks of life within TradFi, and I will tell you, you cannot, us trying to teach people about crypto and its value proposition and trying to sell crypto skeptics on crypto, that's not that's not a viable strategy, right? You can't do that. It's ideological. That's like talking, politics to someone on the other side of the aisle. You're not gonna change someone's ideas, right? Instead, I think that our best bet on is really there are billions of dollars in institutional AUM already deployed into core crypto assets like BTC and Ethereum. Though I think the most recent studies I've read suggest that the vast majority of institutions that are already in crypto are considering and aiming to increase their allocations. And so that's a really for our purposes, right? I mean, we're a team of about 12 people, microcap project right now. The target, there's already more than enough of a target market among institutions, whether they are DeFi native hedge funds or protocols on one extreme, or large family offices or macro hedge funds on the other that just happen to hold some crypto. That world of institutions that are already sold on the basic value proposition of crypto and are just kind of warming up to increasing their allocations, looking at maybe generating some yield instead of just sitting on BTC and ETH. That is where we're focusing, and that will keep us busy for the foreseeable future. So that's where we want to focus. And then to answer your specific question though, there's a few parts to this because we need to kind of segment the market. So at the base layer, the smart contracts themselves that we're building will be permissionless, and therefore there will be a retail investor or just sort of DeFi native investor oriented app, which is our current app that anyone can deposit into. And so those who are already familiar with crypto, who already operate on chain, this will be the most familiar and seamless user experience in the world. You can go on Umami.finance. We have a really lovely new front end that we just launched and deposit right in. Now, in my experience, what you would call crypto native hedge funds. So there's a subset of hedge funds that focus pretty much exclusively on crypto and on DeFi. They will also probably deposit directly into the app because they self custody with they would have their own probably Fireblocks or maybe a Gnosis that they use to custody their assets. But for the broader market, we're really going to use a two-pronged approach, right? So one is, as you suggested, having our own RIA that can custody, potentially at least, can custody digital assets on clients' behalf, right? And so that to abstract away any complexities of on ramp fiat to crypto, bridge to Arbitrum, deposit into the vault, and where do you hold it and how do you know it's safe? We can handle that. We will reach the point where we can handle that in house for institutional clients that don't want to deal with that themselves. More near term though, and I think this will probably be a larger source of TVL for us. We are actively working to partner with established digital asset custodians. And so, I'll give examples of what I mean. I'm not saying that these are our partners, but if you think about, groups like, Copper, right? Or, crypto banks like Anchorage, Silvergate. Obviously, Circle is, building out, their Circle accounts, which are going to be, very common sort of on-ramping and custody solution for businesses. OTC sort of centralized exchanges like Coinbase, they have their Coinbase Custody or Coinbase Prime offering. These guys have already cracked that nut, right? They already have really robust Rolodexes of institutional clients who are signed up for their platforms, who already custody ETH, BTC, USDC on their platforms, and they've got they tend to have insurance in place to protect customers' assets already. So that's just a hugely attractive option. If and our near-term goal for reaching that subset of the market that I described, a moment ago, institutions that, don't, they're not, they're not crypto native, but they do hold crypto, is just through those, digital asset custodian intermediaries. So that's going to be a major part of our strategy.
Damn. Okay. I really like the way you put that. No. No. Yeah. Like it definitely has to happen, and it might as well be you guys. That's one reason why I see you guys going to be a really important part of the space because just to make it clear to the audience, everything I'm about to say is hypotheticals. I'm not saying they're actually developing this. They have a roadmap on their Discord or on their website. But like I think it'll be right now you're just building a GMX, but imagine all the different protocols that you could build on top of on your for your votes or add their strategies from that protocol. So then you add sticky liquidity to this protocol, this other protocol. Let's say Curve, Aave, GMX. I don't know if Compound is on L2, but you get the idea. Like I think that's absolutely massive.
Yes, absolutely. Yeah, you see the vision then, and that's exactly right. And I would add, also just some sort of strategy involving operating validator nodes on mainnet as well. And that might sound like something that's sort of already saturated if you think about Lido or Coinbase staked ETH. But again, as you sort of alluded to earlier, we have a huge competitive advantage by being DeFi native, right? Um, there are strategies that can be deployed by folks who really do have an understanding of, for example, block building, and not necessarily sort of predatory MEV strategies, but just, a variety of approaches that, can greatly increase returns on staked ETH. And I think that, like you said earlier, if anyone's going to do it, it might as well be us because we are just well positioned, the team that we have to, really optimize for that. And once we do, we'll have something that is, very differentiated from existing offerings in that space as well. So yeah, and then beyond that, though, we have not committed to any sort of, there's nothing on our product roadmap, as you said, talking about Uniswap or Aave or Curve, but you're thinking exactly along the right lines. Blue chip blue chip DeFi protocols that are here to stay. Uniswap's a great example. We talk about real yield, right? So something other than emissions as the source of returns on a yield strategy. That's what we're interested in. We're not kind of classic DGen yield farmers at all. And so where there's an opportunity to provide that stable liquidity to optimize a strategy to minimize risk, kind of simplify the form of price exposure for the user, right? Because a lot of people in institutions, at least, they don't want to understand impermanent loss for an LP. They just want, oh, can I get a higher APR on my BTC, on my ETH, on my stables? And with the right hedging strategy, we can do something that offers that exposure to the end user and then provides that stable liquidity and collects, again, quote unquote, real yield from fees under the hood, on any of those sorts of protocols that you just described. So that's exactly what we'd like to do, and it's something that we're certainly very excited about.
No, talking about things that you're excited about. One reason why I brought you on is because I do know you guys have been planning V2, and we've talked about the legal side for a bit. But I want to try. Let's see if I want to ask a couple questions about the vaults themselves. So I was wondering if you could speak further about that. I don't know why V1 closed or like you wrapped it up. It seemed like fairly quick afterwards. If you want, I can
Mm,
briefly touch about that before you go to V2 and like what makes it better.
absolutely. Yeah. So let me just start with some high level observations that are relevant to both V1 and V2, and actually to the ecosystem more broadly. And then we can kind of delve into the particulars. So those who are, following, who are engaged in crypto Twitter, or sort of following the DeFi space generally, they're aware that sort of the buzzword of, delta neutral yield strategies has kind of taken off. Again, this is, I think, sort of a downstream effect of this interest in real yield and moving away from sort of very high risk, kind of Ponzu, um, inflation driven yield strategies. So obviously, a delta neutral strategy that can generate sustainable returns in, say, USDC or ETH is going to be very attractive. And there's a lot of interest throughout the space and a lot of talk about it. And what I will flag for anyone who is thinking about depositing into any delta neutral strategy, and this applies to us too, is really, really be be mindful, be aware of the fact that to do any of these strategies properly, to build a strategy that functions well across all market conditions, that actually performs as advertised, and that is, genuinely close to delta neutral, right? Even, in a variety of, you know, different types of volatile market. That's really hard. It's really a very difficult thing to pull off. And I would say, I'll be open about kind of the learning experience that we've had at Umami. We initiated our V1 USDC vault strategy before the market crash, right? At least that's when we first started, building it. And that was a time where APRs were just through the roof. And, a strategy did, and also the market was generally buoyant. And therefore, a strategy did not actually need to be, perfectly optimized for all market conditions in order to, achieve a stated goal like, attractive delta neutral yield. And I think that, one of our mistakes, and we can get into more, specific details of V1, but cosmically, we did do back testing, but we were really focused on making sure that the hedges performed as desired across a variety of market conditions. And I part of this is we didn't have optimal data, but again, that was in part because we didn't create it. We should have really more rigorously modeled the entire kind of dynamic relationship between our V1 vaults, the tracer hedges that they used at the time, and GMX. But in essence, I think we overlooked the cost of hedging. And the tracer pools in particular that we were using, which are not going to be a feature of the V2 vaults, they had low liquidity. We knew that would be an issue. We were working hard to scale liquidity in the tracer pools. We were succeeding in that. But essentially, because of this dynamic, there was a feature of the pools at the time called skew that functions similarly to impermanent loss. There was a higher cost of hedging than meets the eye, and that was something that we observed play out. Within the initial weeks after launch, that we just were not prepared for it. We were going off some publicly available data about the expected impermanent loss, and again, we had focused our models on just that, making sure that they maintained delta neutrality, and then we were surprised to the downside by the actual cost of the hedging instruments that we were using. And again, that was accelerated by the fact that by the time we launched them, we were in a market that I think, frankly, is, I think the market we're in is priced more rationally across the board than it was, in the beginning of this year. And APRs are lower. And so therefore, there was not the same buffer for, absorbing costly hedges that might have existed, when we initiated. So, essentially, we were being forced to grow up at the same time that the space as a whole was growing up. And that's why, I'm really proud that we, as soon as we realized that this issue was not just a question of like quirks within the keeper bot that could be sorted out, and then it would perform as anticipated. As soon as we realized that this was fundamental to the hedging products we were using and their cost of hedges, we immediately pulled the plug because we wanted to make sure that any product we were advertising performed, exactly as advertised. But once we made that choice, we really did a pretty deep internal postmortem of, what were our mistakes here. And the conclusion was that, the back testing, prior to even thinking about building the smart contract, the back testing is critical, and it needs to be immensely sophisticated if you want a serious strategy. And then we ended up, we have a new treasury manager and product strategist that has been leading this, Wen Moon, who's extremely talented. And he's had a chance to lead this now end to end, where he's kind of parachuted into V1 midway. So that's a significant advantage. And we also brought in an individual who I won't share too many details because he's still employed full time at his primary job, but he has a very high level role on a trading desk at a major um, investment bank that you would know of if I were to share its name. And he builds very sophisticated models for trading strategies professionally. He's been doing it for decades, and he's been consulting with, on behalf of Umami. He's been, pretty much available daily to guide and perfect our modeling efforts, and we have put, I would say, we're getting into month 3 of just modeling, back testing, iteratively improving, discovering little nuances of the GMX smart contract that we hadn't were not obvious at all to I think any user, and sort of optimizing for that, understanding kind of fringe cases with the markets or with TVL rushing into one of our vaults and sort of how that could affect performance. And through that I think we are going to come out, and I think I'm very confident that we're going to have something that is exceptional, that's on in part because of the quality of people helping lead this, that is on par with the most elite sort of TradFi hedge funds and the kinds of strategies that they would execute. And so that's what it has taken to produce something that we can be genuinely confident will perform exactly as planned across all market conditions. And so I realize that this is kind of a long-winded monologue on my part, but to circle back to my original point, that 3 months of rigorous backtesting led by extremely experienced professionals, essentially Wall Street quants, was what it took to produce something that we can very confidently stand by. There are going to be many products being pitched as delta neutral yield in DeFi because it has become something of a buzzword now. And I would just encourage any user to really read the finer print, and if there is not finer print to read, to be wary, right? Because these are difficult strategies to do right.
No, yeah, they're extremely difficult, and that's one reason why I've been really doubtful of all these new. I don't know if coffee cats, because well, I guess they are, but forking is the best type of flattery. So because I have seen like two or three quote unquote competitors that people are starting to talk about, I'm
Mm-hmm.
definitely interested to see what they're gonna come up with and what they're gonna do. And I'm sure you take it as flattery as well because over on the this is not about Kingmaker, but even like the protocol that I'm a part of, even we're noticing relatively shortly like competitors right away just springing out of nowhere. It's like the moment someone comes up with a new idea, there's like three different teams like hopping on it to see if they can beat you to it. Have you heard of any of them?
You're absolutely right. Yes, and I won't talk about specific other projects, but I am aware of a number of other projects trying to either build allegedly similar strategies or trying to build some form of yield strategy on GLP, the GMX liquidity token. And to be perfectly honest, I
You don't have to say anything you don't want to.
right. I'll no, I'll sort of say I'll make a general comment, which is this, right? We don't care at all. And that's, not because we're, head in the clouds and think, oh, we're just intrinsically so much better than everyone else. It's because there are invisible moats, if you will, invisible competitive moats in DeFi, just like any other space, that are incredibly difficult to replicate. Anyone can, hear about the concept of a delta neutral strategy and try and build something like that and market it. But what Umami is trying to do as a project is so distinct, right? And it's so first of all, think about what I just said about the complexity and sophistication and rigor of our modeling process and the quality of people we brought in. Then pair that with what I was talking earlier about you know, the regulatory compliant rails to deliver these products to CFI, to digital asset custodians, institutional capital. Think about Umami Labs, which is our operating company with our doxed team, our transparent uh, you know contractual agreements between the DAO and labs, and our transparent monthly OPEX updates, and the quality of people we have on the team. We have a chief legal officer with 2 decades of experience in international tax law. Pre-pop, our chief technology officer, has been a senior level manager for major engineering teams for very well known companies for over a decade before he joined us. We just have we're just doing something fundamentally different than your standard sort of a non DeFi protocol, to such a degree that it's almost it's almost strange to us to even contemplate that someone would see that as a competing product, because there's no actual overlap in strategy or market or product market fit.
I get you. No, yeah, yeah, because people could say, "Oh, we're making a delta neutral product," but actions speak louder than words, right? So you would actually have to see if they actually can make a product, and if it's actually as impressive as yours, as an example. Like, I'm biased because I've had the fortune to talk to you, talk to your people part of your team, and you
Mhm.
did an amazing job. I will say that, like, Wen Moon, he's extremely brilliant. I edit. I can't pronounce his name for the life of me. Your designer, like marketer, Edis, he
Yes.
does an amazing job. I myself, I'll let it known out there.
Yes.
Like, I asked him
Yes.
myself, like, can you give me some tips? Because, like, I wish I could make work like that, or as good as that.
Yes. He's super talented. Yeah. I mean, we're just frankly very lucky, but I think that going back to what I said, like there are, because we do have a real company, right, for the team, the operating company, Umami Labs, and a doxed team, and we are so much more transparent about who we are and what we're doing. I think that it's honestly, we've had an enormous advantage when it comes to hiring, to onboarding talent, because they're just there are not that many projects slash companies doing what we're doing, right, in the way that we're doing it. And it's frankly been awesome, right, because I wouldn't have expected that 6 months into sort of pivoting a dying own fork, that we would be having conversations with many of the smartest people in space wanting to come work for us and work very passionately and obsessively. But that's been something we've been able to enjoy, because they're just, for people like that, there are not that many projects that seem like they're in it for the long run, and so when there is one, they're very interested.
No, yeah, and ha- having doxed team members is definitely interesting. Like, definitely a route that a lot more people are gonna have to go. At least me as content creators, I've had this talk with my co-hosts ourselves. Like, we see other podcasts, and some show their faces, some don't. But like, people trust people that are willing to like show their face, at least in like content creator aspect. I don't know about like running a DeFi protocol, but it seems like people trust trust you a lot easier if you show your face.
Yeah, that's been our experience, and for us, it's necessary because we build these partnerships with institutional capital and with established CFI custodians. They would not talk to us if we were anons hiding behind our avatar in meetings with them. So that's, we've had to make that pivot, and I we really owe a lot to our chief legal officer for really scrupulously positioning um, Umami in such a way that we can do that without worrying about undue regulatory risk. But yeah, it's been more than an advantage, right? It's been an absolute necessity for doing what we want to do.
And I know you brought it up earlier, but anyone in the podcast that hasn't checked out the website, definitely check it out. You guys did an amazing job. I Even though I do miss the waifus, I'm not gonna lie, I do miss it, but I love how everything came out.
Thank you. Yeah, I appreciate that. And I miss the waifus too. I actually have a quite large poster of 02 in my little co-working space office. So, we actually keep that, the waifu is close to our heart. Yes.
As homage. Yeah, because we all had to start somewhere, and you started there. And in a few months or years from now, you're gonna look back and just have a nice laugh of like
Exactly.
how much has changed.
Totally.
And honestly, is there anything else you could speak specific? Because I know you already spoke of like V2, but I'm sure the audience is curious. If you can't, I'm sure you can't give a timeline, but how do you expect it to go? At least before 2023, or like a time horizon. What do you people expect?
Yeah, yeah, no, great question. Because I feel like I gave some detail on sort of what went wrong with V1 and how what we're doing differently, for sort of the overall approach to product development for V2. But I haven't talked much about the V2 vaults themselves or the strategy behind them.
100%.
So yeah, I'd love to do that. We can actually talk about the product roadmap more
You don't
generally
have to leak
as
anything that
well.
you don't want to. I'm trying to be more careful of that because I did that by accident in one of my podcast episodes. So if I'm prying too much, just let me know.
No, you're not at all. But yeah, no, I mean that. By the way, people getting mad at you over leaks is a sign of success, right? That means that you're getting so many listeners that it actually matters, right? What people do and don't share in your podcast. But I know Kingmaker's been doing very well, which has been cool to see. But yeah, so I will. But a lot of this is public already. So the basic concept here is that we're going to have a uh, three, essentially three core vaults, at least insofar as um, what we're going to distribute to institutional users. One will be for USDC, one will be for BTC, and one will be for ETH. So those will be the deposit tokens. The user experience will be very simple. Deposit into any of those three vaults with the respective deposit token, and you will receive. You will maintain price exposure to that deposit token and receive what we expect to be an attractive APR denominated in that token. So deposit BTC, maintain your price exposure to BTC, get yield in BTC, and ditto for USDC, which of course, by definition, if you're maintaining price exposure to USDC, that's closer to what one would think of as a quote unquote delta neutral strategy. And then of course, we'll have the ETH option as well. Under the hood, those vaults will be providing liquidity to GMX, which I think most listeners are familiar with. Far and away most popular decentralized perpetuals exchange. It's based on Arbitrum Network and is kind of the flagship project on Arbitrum. Their liquidity provider token is called GLP, and our value add vis-a-vis GLP is that if right now anyone's free, of course, to permissionlessly deposit to the GLP liquidity pool and receive the GLP receipt token, but they will have at that point a claim on the price exposure to a basket of assets in GLP, and that basket changes dynamically as people swap in and out of GLP. The traders take on leverage. Sometimes they win, sometimes they lose. All of that dynamically affects the asset allocations within the GLP basket, and so for that reason, it's a complex form of exposure, although it does produce extremely attractive APR in ETH from trading fee revenue from the GMX platform. So what we're doing is essentially decomposing GLP into its component parts, ETH, BTC, USDC, so that the depositors can have effectively single-sided exposure to their deposit asset, but still capture that yield, right? Which, as I mentioned, will be converted to whatever an asset type that matches whatever asset they deposited. So that's the vision. We have some features of the strategy that we're really proud of because they are very differentiating, and I think are going to give us an incredible moat. The main one being that by launching the BTC, ETH, and USDC vaults at the same time and effectively allowing them to function as counterparties to each other, passing market delta back and forth to help each one maintain its target price exposure, essentially, we hugely increase capital efficiency for the strategy. We will still use external hedges. We will use external hedges on the GMX platform using their leveraged perps, which are really nice. They provide a nice linear hedge, none of the complexities of the previous hedging instrument that we used in G1 in V1. So, we're very excited about the overall strategy. And I think, what I'll share, maybe just kind of, it's a bit more forward looking. You had asked about timing. We are very much still aiming for Q4, so end of this year as our launch. I mean, of course, there's sometimes are various reasons, such as an audit taking longer than expected, that can push things back for a couple of weeks. But so far, we are on track towards our stated Q4 launch goal, and I would be surprised if there were significant delays beyond that. And yeah, I think that that's going really well. But what I want to say is that that is really, I don't want people to ever walk away from anything I share with this impression that Umami is essentially just a bet on GMX. We love GMX. It's a brilliant team, great project, and I think they're going to do good things. But Umami's vision extends to the entire DeFi ecosystem, and so we are already gearing up for our next wave of products after the GMX vaults, and we will be producing more subsequent to that. So that when these vault tokens launch, I want I of course invite people to deposit and to sort of see how differentiated they are from other yield options in DeFi. But I also want them to be aware that that those vaults might not be able to scale past 1-200 million TVL because there's only so much TVL that the GLP liquidity pool can absorb. But that is these vaults will just be a taste of more to come, and over time we hope to onboard much more TVL to the ecosystem.
And you spoke a little bit about it, but yeah, I'm really excited what comes afterwards. Thankfully, since I guess one good part about me not being on the team is that I could just say hypothetical things and no one and like it's not confirmed that you guys are ever gonna do it. So like yeah, I definitely understand where you're coming from. Where like while people say you're a bet on GMX, yeah, that's only for now because I had totally. If you said to the DeFi ecosystem, you're definitely gonna build on top of other protocols and add CVL to them, and so I think that kind of like motive is gonna be short lived, because I'm sure by like midway 2023, at least I don't know how big your team is, but I'm sure like you guys are gonna have a whole new set of strategies or products or whatnot for your protocol.
Yep. Well, I mean, what I'll share, which I've shared before, is that subsequent to the GMX products, we do want to launch products built on ETH2. We've been purposefully a little bit furtive about the details of what that strategy will look like, but
Yeah, I see on your
yeah,
on your roadmap
yeah,
here.
exactly. So, I mean, here's kind of how I would think about it, though. If we're just kind of thinking about kind of the pieces on the chessboard and how I'd like to see them move without getting too deep into the weeds on specific strategies. I was having this like really great conversation the other day with someone who's very plugged in DeFi and understands the space a lot. And he made a point that I think is true, right? Which is that there might be thousands of projects, but when it comes to protocols that are serious and very value additive, high quality, already have a critical mass of users, and could absorb TVL at scale and would be reliable options for us to build on and then introduce those products to our institutional clients. Right, that is a much smaller universe. In fact, that's a tiny universe, and that will change with time. But if we think about sort of the absolute surest bet over the course of 2023 with respect to where we know that if we build something that there will be TVL scalability, that there will be reliable yield, that this will be a genuinely high quality product, and where there won't be any sort of unforeseen risks that emerge. The most glaringly obvious option would be to tap into the yield available from staking ETH to validator nodes and then optimizing the revenue generating strategy for that, right? And that is a clear path towards scaling TVL, becoming really important players in the space, and it aligns with the ethos that I was talking about at the beginning of this podcast because if we don't do it, well, we already see Coinbase is building a staked ETH product, Lida is building a staked ETH product, and Coinbase in particular is of course a centralized corporate entity, and I think that there's an opportunity for a DeFi project to differentiate themselves from Coinbase and other competitors because of innate degen type knowledge of MEV and block building and how to optimize revenue for validator nodes. We can differentiate ourselves on the economics, and we can embed trustlessness and decentralization into the product that we build so that as it scales, it is doing a service for the ecosystem instead of further centralizing it. And that's something that I think everyone on our team like genuinely deeply cares about. So that would be a huge win and deserves an enormous amount of attention from us in 2023. Once we've done that, to your point, there are some really great blue chip protocols already. Uniswap, Aave, these are options for genuinely creating sustainable quote unquote real yield that can complement our focus on generating yield on Bitcoin, Ethereum, and USDC. And I think those could be really exciting places to look. And of course, our hope is, first of all, if we manage to quote unquote win when it comes to yield products for ETH staking and for base layer protocols like Uniswap or Aave, we're already massively successful, and we're going to be very happy with that. But the hope is that in part through Umami's success, get more liquidity, get more users into DeFi. That come 2024, there will be more blue chip, long term options for in terms of protocols to build on. Hopefully that's helpful.
No, yeah, it's definitely helpful, and I probably should have gone into the ETH2 side that you guys put in the roadmap. I probably should have dug deeper, but yeah, like I think it's really good to have diversification, like because if I remember correctly, I haven't checked this in a while, but I'm pretty sure Lido holds the majority of the market share. I don't remember, but I think it's always
Mm-hmm.
good. Like people can say it's saturated, but it generally it's good for the ecosystem having more competitors. And if every competitor has a bit of market share, then it's like good for everyone. You don't want one person to hold the control of any one part of the ecosystem.
Yes, absolutely. And the other thing that we want to do is because we've had success at this, right? Like people who are really deeply knowledgeable about DeFi and as well as just sort of the underlying tech for Ethereum are very attracted to Umami. And I think that right now there's an opportunity to have a competitive advantage by getting really smart people who not only understand, oh, this is how I can build an effective, MEV strategy today, but who also have a deep understanding of Ethereum's roadmap for scalability. Because I think that the game, if you will, for if you're a protocol and you're interested in maximizing revenue from operating validator nodes, the game is going to become dramatically more complex and sophisticated over the course of 2023 as Ethereum's roadmap for developing sharding and for developing sort of proposer builder separation and all of these iterative improvements that are designed to support scalability. There's a
Mm.
huge opportunity for someone who can be at the cutting edge of that and optimize for it. And frankly, at this point, I'm not even sharing alpha because it's not like we've been busy perfecting our GMX strategy. So it's not like we have some secret strategy for winning at ETH operating ETH validator nodes based on how ETH will be at the end of 2023. I'm just saying that directionally, right? As I think about my role, as CEO of Umami Labs and kind of where I want to steer the ship, that's a great direction for us to position ourselves in because there's an opportunity to really support decentralization of Ethereum. We can make sure that everything we're building complements the ecosystem, and we can just make sure that we're on the absolute cutting edge of some of these things that are going to really transform how anyone who wants to run such a strategy needs to go about doing it.
No, yeah, and talking about cutting edge, and I'm sure you guys gonna want since you guys are gonna be entering that market as well. I'm sure you haven't started developing per se, but like I'm sure you guys have thought of a lot of things. Has it came to your mind that of a potential partnership with a protocol that's already in that space or a potential company, or
Mhm.
okay,
Sure. Yeah. I mean, we've talked with some folks that are building infrastructure that we might use for our strategy. The more if they've built a audited, trustless, permissionless smart contract, right? So that because we don't ever want to take on unnecessary third party dependencies where like we are relying on the discretion of a team that is not us for our ability to execute, right? That kind of that is that kind of flies in the face of the concept of trustlessness, and that's not a best practice, at least from based on my experience. But
yeah.
if there is infrastructure available that can be used permissionlessly, that where we can check the smart contract, we like the code, then of course that cuts our development time, and so we've definitely looked at that. In terms of institutional partners, so that would be more, I would think, about onboarding TVL, and I mean we have tons of partnership talks about that all the time, so that's a major focus of ours.
Okay, good. No, yeah, that's definitely what I was thinking about because I guess as a part of content creator, like it's kind of part of my job to dream and like think of things. So I could definitely see you guys working with different
Mhm.
protocols or different ETH staking solutions. Um, and like I'm not gonna name anything per se, just because. Well, sure. Like let's say like our ETH, or I'm pretty sure. I hope you guys don't go with Lido. Lido already controls too much of the market,
Mhm.
but you get what I mean. Or like Stakewise.
Stake-wise and our ETH are um, let's just say that those are good names for you to have thrown out there. If you were to make some guesses, if those were guesses, I would say those are good guesses in terms of And I'm not saying, again, I'm not actually sharing that much alpha. Like those are folks that we would certainly be happy to work with. Let's put it
Yeah.
that way. And we're not even far enough along with this particular strategy to say we have any kind of concrete partnerships. But
No,
yes,
I'm
those are
sure.
projects we'd love to work
No, yeah, like I love them. I've been learning a lot about Stakewise recently. Yeah, I've a lot of the people in this space are really excited about them. But no, I'm glad that named a couple of guesses that were really nice. I know we're heading towards the end of the time, so I was wondering, is there anything that I
with.
missed that you wanted to talk about, or anything you're excited about that I should have covered in this episode?
No, not really. I enjoyed just kind of the general chat about the ecosystem, and maybe the one bug that I'll put in your ear that I've noticed from working in business development capacity with respect to our upcoming products is that there's really a need to increase the underwriting capacity of smart contract insurers in DeFi. So, we are working hard on our end to actually build some relationships between TradFi underwriters and DeFi smart contract insurers to help increase the overall underwriting capacity, because that I think will be a significant differentiator for our vault products when they launch, will be to have to have products that are insured and to have sufficient TVL, sufficient underwriting capacity to actually cover our ambitious 100 million to 200 million TVL goal for these vaults. But I do, and I think from everything I've seen, institutions institutional capital really expects that before they make the plunge. So I'm just sharing that as a general observation. I think that is the next shoe to drop in terms of the maturation and the institutionalization of DeFi, because that is clearly a bottleneck, and it's one that we're working to resolve at Umami.
One thing that I'm not an expert, so I'm gonna name an example. You're talking about things like Risk Harbor and like things like that, or no? I'm not an expert in everything, so I'm actually like
Yes,
okay.
Risk Harbor is a great example. Insurace also does this. There's an interesting sort of regulatory compliant smart contract, an insurer that builds regulatory compliant smart contracts to insure on-chain projects called Names. That is interesting as well. But again, all of these guys, they're really important because they're developing all sort of like Umami TradFi relationships, and the more success they have, I think the more scalable we'll see the entire DeFi space become.
You're right. Actually, I've noticed that since I've been in this space, they don't get talked about too much. The last
Mhm.
time like they got really spoken about was in the UST DPEG debacle, and everyone was talking about how amazing like Risk Harbor was. But honestly, yeah, they relatively go under the radar from what I noticed.
Yeah, but I think they will have their day. Yeah, that entire category. I'm not trying to pick winners, but that category of protocol will have its day in 2023.
No, I understand what you mean
Um,
entirely.
yeah, cool, awesome. But yeah, no, I think in terms of Umami, I think we covered a lot of ground. Did you have any final questions?
No, but I'm really appreciate for you to be coming on today. My bad for my stutter. If there's anything you want to shill, anything you want to advertise, or anything now that we're at the end of the show, go ahead. And yeah, I really appreciate it for having you on.
Yeah, no, great conversation as always. I'll certainly shill Kingmaker. I think we've had now two really great conversations. I know you've had other conversations with other protocols, so I think this is really becoming a great source of information in DeFi. I think with respect to Umami, just remain for those who are following us. Two things: pay attention to our upcoming GMX Vault launch, and remember that we are building an even more robust suite of products over the course of 2023. So stay tuned for more updates on that as well.
No, yeah, thank you everyone for listening. I will put their links and their socials in the description.